Running.
Okie doke, cool. Well, let's get going with it then. So, looking at just a kind of a tidbit to show you guys what we got working on. This thing should be out next week. We're just doing some finalizations on it. This is the MDVD. We're getting to the point now. We're seeing some really crazy stuff with it. Volume control, ranges that are being automatically plotted to retest ranges and range structure. The big thing is that we are seeing the capability of this thing as a scalping tool. So we're going to kind of do a little kind of demo to show some of the scalping capabilities of this thing, and then also to show some price action stuff, that how we can better ourselves as far as like strategy and whatnot. Essentially what you have with this thing is you have all the tools that you essentially would have from a premium account with the volume control, point of control, except now you can actually see that volume based off of who's in control, if there's bullish or bearish volume in the area. So, even here on like the 3 minute, right, we're seeing some significant levels. Looking at stuff like cumulative delta, where we can see literally the points where we have an invalidation of the short liquidity. So if I zoom in a bit, as I am on the 3 minute here, you're essentially seeing like this as a point of, don't worry about the line point. This is just so you can see it on the chart. But essentially you're seeing points like this where, well, you have reversals in volume where volume was taken out. And then the more interesting thing, the thing that I like the most, after speaking with, what's his name? Speaking with Matt earlier and Mr. Bing, we were talking through a couple different points and turning some of this stuff off. Cumulative volume, keeping the volume candles in the volume range. There you go. So looking at just volume candles. So not only does it give you a VRVP, a volume profile, but we're also going to be able to see it. Let me see if I put on the 15. I might see a little bit better. The biggest thing that we want to see with this stuff, God, everything keeps breaking. 1 second. Come on. With this thing, I really see a low time frame capability with it, for a couple reasons. So even here on the 15 minute, this is what's really cool with this thing. So the green lines below it are actually showing you where there's bullish limit orders being put in. And you're essentially seeing points in as your candles become hollow, because what I have ticked on here is the volume candles. You're able to see where volume takes in control and switches. So, price moving down here, a lot of limit orders got filled. Price, even though the volume was down here, the point of control for the green volume was the most of it was down lower. We had the gain of the volume going higher, gaining back stuff like the daily open. And this is stuff you can use to scalp trade this stuff very effectively. Points like what we had earlier today, we were doing a test trading this stuff, just this thing. And we saw essentially, well, here price, volume's in control, massive move to the downside, but volume still gains back structure, move back to the upside. And now what you see is essentially with this thing, you can see points of higher time frame volume as well. So if I go on, as an example, I'll go on the daily, and we want to see volume structure. Essentially, we go from pretty high volume area to essentially very low volume. And you can see that even more clear. Oh, I think it just flashed. 1 second. Even more clear when I put stuff on the higher time frame, like cumulative volume delta, which it'll show you basically a month's eye view of the volume. So very strong upside volume. And then in the current month, the current high, very low volume comparatively to what we did before. So this is incredibly powerful as far as seeing like major turnarounds, and essentially giving you the major levels where you need to gain above, i.e. the weekly open, to essentially go higher. So we're getting close to it. There's some small things to fix, some alert testing and stuff, but it's going to be an invaluable scalping tool. So going into scalping with what we have now, and this is just going to be kind of, hitting the basics as far as low time frame. I'll probably do it on the 15 and start from there. That's a pretty, high time frame for low time frame, I suppose. So essentially everything plays out the same, right? I've got my swings being noted. I'm using auto charting tools. I've got just to show like where there's a reversal, a major reversal in swing level. Not that matters. Swing sensitivity 5. You can turn it all the way down to only show the most important ones. But what I want to be able to do is use this in confluence with high time frame levels, and then general support, resistance, SRs, that type of thing. So just looking off of the scalping stuff, we're going to be talking about mostly it's swings and trying to scalp levels. And this is where it starts getting into the important thing of overall movement. So swings are very simple, price swinging up and down. That constitutes price swinging, right? When you look at each individual swing, because we're on the 15-minute, you actually see, right, at these highs and lows, you're going to get smaller ranges, right? And these things are denoted such as this, right? That's a swing. That's a swing. These are major points in price action where you create range structure that allows us to go lower time frame to make some essentially put in orders and say what needs to be tested if we go back to that range, because this is what they are. These are ranges. Let me box those off, and then we'll go lower time frame, because that makes way more sense if I'm going to do that. I'll make those green, the green fill box. Green, right? These are ranges. And we'll put another one here. And another one actually there, because this is an important one too. So with this, right, we're looking at a higher time frame. We're seeing that price is going from this point, right, doing all these things, swinging up and down, essentially, right? So that's what when I draw out swings when I'm on the streams, that's what we're looking for. These are the different points that are important because you're seeing reversals and changes in price action. And we use this on higher time frames to look lower. And you can use this if you want to do it from like the most macro period, look from like the weekly down to the daily, the 4 hour, that's fine and dandy. We're going to be focusing this 15-minute and below. So from here, I'm going to drop all the way down to the 3-minute. 3 minutes is a nice roundabout number. So with this, we can actually see in these ranges where there was continuation failure, and then we can kind of assess as to what's the most important stuff going on. So starting at the top, where we had like the range high, the range loss, where's the big loss of level? Essentially, the first real major loss of level is right here. The next major loss of level is right here. Essentially what you're doing is you're losing, of this 15-minute swing, we're looking on the 3-minute, we're looking at the lower time frame. This failure here is the most significant one in the structure. This is a little bit preemptive. There's a lot can happen in 3 minutes. But this, at that point, the moment we lost it and went lower, that's the first thing you target. And for one reason alone. In this swing, this is the high of this, overall swing, right? This whole box, this is the high of it, and this is the low of it. In the middle of it, you have the level here. This is the midpoint of that little range, and that's the level that you gained that took you to the high. Now, the reason that's important is that these levels that you gain, that you create structure off that take you higher, are levels that you look at for failure and shorting. Same thing in the inverse. If I invert the chart, it changes nothing. We create a new low. Where do we want to see the higher low? We want to gain back the level we lost that took us to the low, which is that. And this is a repeatable thing. This is the whole point of why we do these kind of trading systems is if something is cool and sexy and you can only do it once, it doesn't matter. But if consistent and repeatable, you now have a strategy and a system that can work indefinitely. So that's an example of it, looking at a lower time frame. If we go back to the 15-minute, going to some more price action, here's a pretty interesting one here as it reacted to the left of us. What happened in this little 3-minute zone? We go back here, right? We had an entire invalidation of that downside move. Price moved back up, created some basing structure at the high of the swing, and then failed back to create new lows. So that's essentially now invalidated because all of the moves that it did, it just rejected everything off the floor. So that was the level we had to hold. We lost it, bearishly retested it. We couldn't regain that low overall. And then above us, since we're on the 3-minute, anything that we lose goes lower. And looking at some of the structure we have here, you can see stuff like, well, that's the level that we kind of like, locally, the swing level that we lost and let us have a low here. So what do we look to the left? Is there anything major reacting off of it? Not incredibly. So it's not super reactive at that point, but it is still an important one to note. A better one was down here on this range and this swing. Why? Because essentially what you're seeing here, right, is that price creates bottoming structure. That's the close. That's the important part. And this is why closing of candles is so important. When we actually had the hold of level, right? That was the level that we gained that took us to the upside, essentially. Your longs, as long as price is above it, if it comes back down to test this range, you want it to test the very tippy top of this thing, which is why we look at these really important little blocks to the downside. And very often you'll get these test continuation that move all the way back up until you see continuation failure. And again, the more you do this, the more you plot them and start being able to see how things test stuff, it tells you how strong or how weak something is, what's the probability of retest, especially, hey, we created some floor structure here, but, we lost some stuff previously, we made a new high, no retest of level, that's how weak it was, new low created from this low, and then continuation failure until you eventually lost that. Close below, bearish retest, continuation down. Essentially, it's no different from looking at it inverted. It's the exact same thing. Price goes up, comes back down, closes above, and bullishly backtest for the continuation. This is why bullish backtests are the only thing I care about, even on 4 hour, even on 1 hour, because if you're not looking at the backtests, you're essentially gambling and hoping that it'll backtest something bullishly or bearishly. So, actually, I'll put that back real quick. So I kind of want to just harp this on a low time frame and how this is so effective. And again, we're going to be able to do this with the MDVD. We're going to be able to see points where, hey, we have volume that takes you out of control in this zone. We have volume going back up the upside. Low volume that takes you back to retest the level. Low bearish volume in this zone. And again, this is going to be a scalping tool mostly for the low time frames. And then seeing the high time frame, low volume areas, right? So essentially, that's what we're going to be using it and looking for overall. But until we get that out next week, it's a little bit kind of almost mean for me to just keep showing that. Looking at the 15-minute and the reason why some of these levels play out. Here, even on the 3-minute, right, we have an overlap of level. Right? This swing here, this overlap of level, which is valid on the 3-minute, right, is still valid in the current price action, and becomes major points for gain or loss of level. This is essentially when I draw those green lines when I'm doing the normal streams on like the 1 hour and 4 hour, you can do this on the 15-minute. And this is why it becomes so powerful. Because essentially all of these key levels, all of these major, highs and lows become points where you look for the major tests. Now, the most important stuff about this is your most key points when you look at highs and lows is it's the two candles that are right next to the low or the two candles right next to the high. That's going to be kind of like your demarcation line to say, well, this is the low of the swing and the high of the swing. So even on the 15, that's the low of the swing. Why? Because price is swinging to the upside, right? Makes sense? That's the low of the swing. That's the low of this kind of smaller range, lower time frame range. That's the high of it. That's the close. You can do it to the wicks, but I've always found myself to use the closes because you'll get more accurate data. And getting closes above previous closes is more important than going higher or lower than previous wicks, essentially. Because wicks are just potentially liquidity grabs, right? That's a liquidity grab. It wick down, cascading failures, longs getting flushed out, bouncing back, higher low, the real higher low was somewhere around there, right? So this is why we wait for confirmation, and this is why patience is the key overall in this price action. So that's an important level that we can look at going lower. Here we had a big swing to the downside. Again, very reactive, kind of not really, not super awesome, I would say. And again, this has already been tested now. But when this move up tested this entire thing, I don't care about this swing level anymore. It's not something that's super important to me. I'm looking now at whatever tested it most recently. And that's because this price action based off of this swing is more relevant to the current price action. We can talk about when we break out and start making highs, then we look at previous price action. But if there's something that's local, which this thing already fully tested this entire downswing, this to me is invalid. I don't care about it. But now we have something more local. What are we looking at? Well, there's two major levels. We have the high of it there, and then we have the low of it there. Essentially, these are the two major points that we look at as far as testing levels. For this to go higher, right, for this thing to basically gain that swing and go higher, what do we want to see? We want price to go above and close and bullishly backtest the swing. That is a bullish backtest of level. What have we done locally? We have tested it. We've only tested the low of it. We haven't tested the high of it, right? So the high is still valid. The low, less so, but we're still going to leave it in there so we can keep an eye on it. And now what we want to see is if we have a price moving back up, we want it to gain above. Local price action, what do we see? Test the high of it. Test the low of it. The low is what's being perfectly failed. And as you go lower, you'll see how these things are reactive. On the 3 minute, on the 1 minute, again, price breaks up, closes back below of the high of the swing on the 15 minute, fails, comes down. What's reactive now? We're looking for failures and closes underneath that level. What takes us higher, essentially, on the 3 minute, you want to be gaining 28.9 and then creating higher lows of this smaller time frame one, gaining this swing structure, so to speak. So the whole point of this, and I know sometimes looking at it from the first time I saw it, it took me a long time. It took me probably the better part of a year plus to really get good at understanding swings and why they're so reactive. And the easiest explanation of this is all you're looking at with these swings, say at the 15 minute, is that these represent a lower time frame range, and these tests of ranges are asking a question. In this zone, there was supply, which means there's more people selling than buying, which pushed price down. Is that still the case? Or if we gain it, we have flipped it to demand. There's more buyers than sellers at that price. And that's the only question that's ever asked with moving a price, essentially. Yeah, there's stuff like liquidity. There's a lot of other tools and stuff we can use to our advantage to kind of give us a direction. But that's the big question that we look for, right? We look for that question of, is there supply or demand here? There was demand here. Great, at these lows. We've already done it. It's fully tested. Now this is less valid than some of the more local price action. So you can break this down all the way to the lowest, most relevant local time frame structure, right? You can do this stuff on the 1 minute time frame. It's a lot more difficult, but it's still possible, right? You've got your lows, you've got your highs, then you have the high of the swing, your low of the swing. What are we doing right now? Why are the high time frames still reactive? Because even on the low time frame, they're reactive levels. If we come back down, we want to see what? A low, a test, close above that swing, which means it holds. If it goes below it and closes, we want the bearish back test to go lower. All we're asking it consistently and over and over and over again. And these things can be done, like I said, on the 1 minute. There makes no difference the time frame from high to low. The only thing with the lower time frames is that it's much higher risk because you have the moves are happening as fast as they're happening. So I don't recommend 1 minute trading. 3 minute, 15 is about as much as I kind of recommend for people who aren't having a good system in place yet. 3 minute, I think 5 minute I'm not a big fan of, just me personally. But even here on the 15, we can do quite a bit of stuff on it. One of the easiest ways to kind of see is just plotting the local price action. Okay, that's the nice failure there. That's the nice failure there. What happens if we gain that, since this has this been tested? Nope, not tested. So essentially, if we do this, we're looking for a close above to go higher. What are we doing to the downside? We're testing structure. Almost at it. There we go. We're testing structure. Right? These are the 15-minute levels that are important. You've now got some levels for gain or loss. How do we use that lower time frame? Is it as reactive, lower time frame? No. Is it as accurate? No. Because you're going from a high time frame to a low time frame instead of a low time frame to a high time frame. The biggest thing with for this thing to work is that you want to take the higher time frame swings and then trade them potentially on lower time frames. For me personally, I would rather see stuff like this. We're here at this swing. We've got this thing being fully tested, right? This swing is fully tested with this candle. So my expectation is if we go lower than that, we go potentially all the way back down here because that's already been tested. What are we doing currently? We're failing swing. We're testing the lowest stuff. We're failing, right? Bearish retest of a daily open, bearish retest of a swing above. Everything's pointing down until you regain some levels. So essentially what you're trying to do with this whole system of understanding the swings and the scalping part is to say, where's the reversal? What's really important as far as the reversals? So even looking at the 1 hour, we can infer quite a bit just off of these major tests of levels, right? That's the high that's important. That's the low that's important. Does that play out in the 15-minute? Yep. What do we look for from the highs? Well, if that's the high that we care about on the 1 hour, price goes down, bearish retests, goes lower. Price comes back up, tests it a second time. Did it change anything higher time frame? No, still closed below, still valid, still relevant. It's still tested. So if we gain above and close above, that will break us out. But until then, we're going now to the lows of the structure. So even now in the 15-minute, looking at the 1 hour, what do we want to see held? 28.6. Does that play out in the 15-minute? Yep. We don't want any closes pretty much under that candle and that candle too. So 28.6 is the 28.640. This is the level that we want to hold at all cost if we're breaking back down, which we're holding some structure here locally. Very, very flimsy, very little, is actually holding this zone. So you're just seeing, essentially you're seeing a continuation failure of structure, right? Failure, failure. And that's all it is, over and over and over again. And the more failures you see, the more you can start looking to the left and say, where do I want to see bounces from? So there's a lot to unpack there, and I know it's a heck of a difficult thing for most people to get. It took me a long time to understand it myself. It's not an easy concept. These step-off points, essentially, the things that help you out too is when you see very clear levels of bullish price action, bullish engulfing candles, that type of thing. It really tells you it's like, hey, something really important's happening in this zone. Even down here on the 1 minute, right? What do you want to see? Close above, bullish back test back higher. You can't make a lot of money in these little ranges, these little 12% moves. So again, the 1 minute, it's not great. I would much rather recommend going higher time frame, just because essentially what you do with the lower time frames is that you put yourself at too much risk, because the only way you make enough money to pay for fees and to justify, moving from essentially failing here, failing at these highs to go lower is by setting profit targets and then moving your stop loss. And if you can't do that effectively, all you're doing at the low time frames is you're really market smashing in and out of position, which is not ideal for a lot of reasons. So again, that's my big thing on the scalping stuff. Just kind of wanted to go through that a little bit with everyone. Talk about the swings, talk about scalping. The price action essentially is the basis and focal point of everything that we do is gain loss of level. So with these low time frames, we can also use some of the other tools with us, understanding some of this, scalping level, scalping structure, looking at higher lows and lower highs, that type of stuff. We can start using things like the oscillator. The oscillator is a great little tool to show changes. Even on stuff like the 3 minute and the 1 minute, you're going to see much more significant changes as far as divergences and that such, where you'll have points where price is significantly bearishly diverging before it actually breaks. So what you really want to do with this, as far as using stuff like the oscillator, you want to see changes. So gaining levels back above at the same time as you get a bullish divergence, that'll help you as far as identifying some of the moves. Going lower, what are we doing now? Well, we can see that strength, the skinnier line, is breaking back to the upside as price already broke back to the downside. So this is good. We want to see now trend start moving back up, and we want to see the gain kind of like at the local swing that we're kind of fighting. We're retesting stuff to the downside. So if we see the failure here, that potentially takes us back down to test that or lower. And that's the way we're kind of playing it overall. with the actual the oscillator and stuff like that, again, take it with a grain of salt. 15 minutes much better because then you actually see, when it gets very, very overbought or oversold like it was in this case, what are you looking for? You're looking for the higher low structure that takes you higher. Very clean levels, just blindly buying that would have worked in this point, but you always want confirmation. So I always recommend that, have that extra layer of confirmation. It'll just help you out. And using stuff such as the on-chain metric bundle. This is one that you guys know how much I love, right? Essentially what I do with this is I set it on retail stablecoin demand, and then I have it on inverted. So I invert the chart to basically show when there's very high retail stablecoin demand, that means people are exited and not in long position. This is also very helpful for Bitcoin, just like it is in any kind of alt, essentially. But that's another layer of confirmation I can use along with the Harmony Oscillator. All three are bottomed out. What am I looking for? The higher low from the swing, bullish retest, take you higher, profit target, failure, and Bob's your uncle. So there's a couple things you can do with it. There's a lot of different strategies you can employ. Another one is also using the crypto flow index. Lower time frame, it's effective, but it starts to get a little bit more quick moving, faster than you can really react to it. I'd say the crypto flow is much better on like the 1 hour because it shows you like the general change in the direction of travel. So even now, as the 1 hour is getting quite bottomed and starting to come back up, we're essentially bullishly deviating. We just haven't closed back above anything to show that we're changing the trend. When we do, we should be getting some bullish deviations across the board. Let me see if I can get this sucker to load. A lot of resource heavy things. There we go. So essentially what we see is we have bottoming structure on the stablecoin demand, again giving us potential higher lows, showing that price is coming back to the upside. Stablecoin not fully breaking down as far as flow, but other things are moving. So high caps, large caps are still leading the charge, Bitcoin, ETH and such. Altcoins still doing quite well, shitcoins less so in this area. So that essentially tells us like what's going to be really happening when we have the 1 hour, maxing out on these really big dumps. We look for breakdown, right? We see some reversal here, right? As this is coming back up, the plays has apparently been, a bigger move as we went down. This little move down, a lot of people started buying altcoins, so you could see that move in altcoins moving up before everything else started breaking. And it's just a nice way of being able to see different types of flow of movement in the overall structure. And then to kind of tie it all off, we've been bullish on funding for a very long time. This is extremely bullish funding still. So until that starts drastically changing and funding starts coming up massively, I'm not expecting more downside until we start seeing funding getting pulled. Essentially, this is a leading edge indicator, so you can see this as it comes up and price keeps dropping. Basically, longs are being less incentivized. People who are shorting are still paying a premium, but they're not able to, stop the fact that longs are just not interested in the current price. So we talked about a bunch of different stuff, or excuse me, I did. I was rambling for a while, so sorry about that. I'll kind of open it up here if there's any questions about understanding the price action stuff, the swings. Open channel if you guys got anything, just lay it on me. I know it's a lot. I know it's a lot of information. Just let me know what you think.
I think those that have the questions usually are not here. They come later in the evening.
No worries.
So maybe they should start telling the questions so we can forward them into the stream.
Yeah. Well, I mean, that's the thing. It's like I know that the time frame doesn't always work for everyone, but trying to keep it consistent to see if people can make it. But I know, and again, thanks for watching it. It's
it's a good time for me, and I can record, so it's okay like that. So.
Yeah. So as long as we get the content out there, so people can actually use it, for the guys in the Discord can use it. That's the important thing. So. Go ahead.
Can you show the
Go ahead.
relative delta with
What's that?
collected time rates on 4 hour? The cumulative delta.
Yeah, absolutely. So you mean the new indicator we've got coming out?
Yeah, on a 4 hour.
Okay. Yeah.
With collected funding rates.
Something with your sound, it's breaking up.
Yeah, I can't hear what you're saying.
Oh.
Is this what you want to see? The volume?
That was shit ton of information. It's gonna take a while to get used to that one.
Yeah, so what I would recommend is stuff on the 4 hour and things like that. I would probably recommend turning off volume candles and using volume profile, point of control, and then the order book, which allows us to see essentially the different areas where people in limit orders were being placed.
It's really, really heavy on the computer.
Yeah, well, it adjusts to visual. So we have it adjusting now to visual. So when you move it to the information you want to see, you can then start seeing the visual of it all. I've turned off the volume candles because seeing it higher time frame like this is a bit harder to digest. But I've got stuff like ranges on, and I've got like the limit orders essentially. So in the visible profile, the big volume, the big point of control is about 28.1. Seeing that the volume above us and how that's reactive, essentially, you do have quite a bit of blow off up here. And the big thing is that you're able to see on chart, hey, we're actually failing volume. Volume's going down at the same time as price is going down. Essentially, the point where bearish on the flip of the day, bearish volume took control. And the only time we popped above slightly, it was then failed under the weekly open. So lots of these red zones, these red and green zones, these are effective limit orders that we can be able to pull in to show like what's actually going on in the current price action. And if I go to the right, you can see the bigger volume profile on the 4 hour to kind of show where stuff is. So essentially, we have the bearish control of volume on the current price action there. And then the local stuff, coming back down to it, we don't want to lose this 28.1. So if we do an under over, we want something like that regains really quickly. So higher time frame, it gives us the volume profile, and then also shows us the important part, which is that, and where we are in the overall price action. And the big thing there is that with the volume itself, like the cumulative volume delta, when you're actually seeing the reversal of volume, of who's in control of the volume where, that's going to be the big kicker. If I turn off if you can see that and then turn off the cumulative volume delta, one of the bigger ones now also, I'll turn the order books off too. I think we're going to default some of these things off just because it'll help us as far as identifying stuff like the current thing, which is really cool. These volume ranges, the blue colored ones, these kind of like blue versus gold ones, these are these are essentially the differences between accumulation and distribution. So when we have like upside versus downside, but what we're able to pull now is actually decent range structure of like retesting range structure. For me, I think it's like the 1 hour works arguably the best. Looking at the higher time frame, because you can see the full 1 day, the 24 hour of the volume delta. You can see the ranges as they play out, like the big massive kind of range movements, so to speak. And then in these areas you can see where, well, we have accumulation, we have moving up, accumulation, and then we have distribution in a low volume area, which is also the point of control, which is also where we saw an increase of bearish volume. So essentially at the time, if we have green, 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 and then, or blue, 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 and then we have gold, 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 what are we seeing? We're seeing that, in these zones, essentially, we're looking to short the highs of ranges or long the lows of ranges more effectively by saying, well, we're in a bullish zone, so it's giving us higher confluence to long the low of the range by volume than not. So, and then with that, like, again, as the scalper tool side of this thing, which I think is my favorite part, I'll turn off volume profile and put on volume candles. This is what I'm going to be interested in the most, mostly because with this, you'll be able to see things that that are anomalies, essentially. Like a good example of this was like like an hour before the stream. We had a massive bearish volume candle down, which means lots and lots of sell volume, right? But price came up and created higher lows on that structure. So what does that tell us? If this is low volume upside move that's gaining above all of these shorts that are out of position, what do we know? We know that these people are out of position. They're going to cause liquidity moves to the upside. By the time you get to 7% or 0.7%, 0.75, they're completely, the 100x are getting liquidated, essentially. If we take from the middle of that whole volume, which is, pretty basic, what do we see? 100x's and 50x's all got liquidated in that zone. Again, more of an argument not to do 100x and 50x trading. With this as well, it shows you where the most amount of volume is on a candle. And the more small, like specific points that you get, it basically says, well, that's going to be like the really important part of the chart going to the right. So being able to see that volume, especially low time frame, can help us scalp quite a bit because it shows us where people are caught off position and whatnot. So price moving down, like essentially you're seeing almost order flow, but it is volume, right? Because it's all in the candle. So as an example, what we saw, about an hour ago. This is a really interesting, move up, right? Bullish volume in control, bearish volume, bullish volume closes higher, move back down. We don't lose the low, right? We move back up, good volume. But what do we see? We see exhaustion. We see very low bullish volume, no one really trying to buy. Price moves down with low bearish volume and then moves away. So essentially what you're seeing there is, if you understand basics of things like order flow, this is essentially showing you the order flow of the volume, which is that movement there, price is moving up, buyer exhaustion, sellers step in and move price down, and then price moves away. That's essentially order flow, except it's not actually by order, it's actually by volume. So the fact now is that really simply, what can't we lose? I mean, look at the volume. It's like, what happens if we lose that? You're going lower. Does that play out if we just look at the price action? Yeah. So we have quite a bit of confluence on some of these major levels. And then volume, cumulative delta. We'll show you like the on-chart delta of the of what's in control and where. So the interesting part of this thing, being able to see, well, volume came back down, started reversing away, so bearish volume lost control. The lines at which the cumulative volume delta are in now, we're going to try and adjust that to make them more, relevant to the current stuff. Right now, it's really just showing the local range high, which I guess is interesting, but it's a little bit harder to explain to people. It's like, that's the range high, so if we gain that, you're gaining some range structure. So even now, what do you have? You have increasing volume going down with the rest of price action stuff, that we know of. Price moving down. It gets a little bit, thick in this zone. Again, I think the cumulative volume delta is better, higher time frame. Lower time frame, it's entirely the volume candles that really, really bang for me. So, if we get a green candle, like a really strong green candle that doesn't close over this, where do we want to test? Probably back at the highs, somewhere around here. But currently, lower volume, bearish volumes increasing to the downside, and the longs are being consistently taken out. So we're working on a big strategy book for it, or like some strategy plays as far as easily using it, because I know it's a lot of information, and it's going to be a change for a lot of people who aren't used to using these types of indicators. But especially with things like being able to see if I turn that off, and then the active limit orders on like the 1 hour with volume profile, we're going to see some pretty interesting things as far as where the major levels are, and then where the major volume reversals are as well. We can just get the sucker to load. It's pretty resource heavy, unfortunately, but
one question: how would this one act on lower liquidity coins?
with lower liquidity coins, you're going to see we looked at that, the biggest spikes, like the biggest changes in volume are going to show you where major buys happen. So essentially, if something's in a major downtrend and you see some big giant green buys volume that starts moving price away, you can then say, well, there's a big buy there, and that's potentially changing the direction of travel. If that makes sense.
So it can be a good tool for the smaller caps too, then.
Yeah, absolutely. Because actually, even more so potentially, because things that are very low volume, and all of a sudden you see a massive spike in volume, like that's clearly reversal of price. If it gains levels, if it gains ranges and structure. So here, what do we have in this downside move? We see some limits, some limit shorts being built up. We've got limit longs right underneath the lows here, around 28.08, 28.1, right? This low of this range here is about as low as we'd want to go, essentially. Right? We don't want to go anywhere below that, just based off of the volume. What are we still doing? Are we seeing any major changes in the downside move? No. We had some potential people trying to buy the top. They were failed at pretty easily. And even using the volume candles, you can see that price moved down. And by the time that happened, all of the volume above you, the green volume, was out of position, and it just nuked off a cliff. And that's the real thing, is that you can see, there's bullish volume there. That's where it's in control. Bearish volume, clearly in control underneath the previous stuff. Bullish volume, but it's below the previous bearish volume. Nuke off a cliff. And that's the kind of continuation stuff we have that we really care about. So what are we seeing now? We're seeing some big bullish volumes that are lower than the current price action. So what do we want to see? We want to see that held. If we lose that, we go lower. That's essentially losing April Q2. And now looking to the upside, we've got some limit orders in place. This is potentially enough liquidity to start moving us back to the upside. So we know, downside movement, direction of travel. And now, we've got 2 hourly candles that are pretty strong on bearish volume, but price hasn't moved that far down. Specifically to test stuff. So my big thing is, if we start gaining back up, we want to see some continuation tests back to the upside. And essentially what you end up getting is, by looking at all this stuff, is where price may or may not go because what's in control of the volume, right? So here is an example we had on this 1 hour from yesterday morning. We had the move down, or from today, this morning. We had the move down. All of the volume was down here because people were trying to late short smash it because all the bearish volume was here. The next candle, what happens? Bullish volume steps in, and you have a move back to the upside. Price comes back down, but bulls supremely in command of this candle, moving it back to the upside with volume. So essentially, that the candle stuff is a lot better on the lower time frames, I think. But even on the higher time frames, it helps you kind of identify where people are. Like in this downside move, like we had this big move on Wednesday, right? This big nuke. Where's the majority of the short volume? It's in the same spot. What happens if we break above that? We're going back up to test stuff, right? Like that's essentially what we look at. So it'll help you identify where people are out of position. That's the biggest thing. Where the majority of volume is out of position, that's probably where we're going to go. And now what do we have? We've got, bullish volume where we're at now, bullish volume where we're at now. We want to see gain above to get rid of that volume. If that gets put out of position, where can we think? We think we go back to the highs. There's some bearish limit orders in place. We see a little bit of change just now since the hourly updated. So what do we think? Is there still enough potential limits to take us higher? Yeah, absolutely. And if we do go higher, where do we want to test? We probably want to test all the way to the low of this structure, where we had the failure, the loss of level. Are there still enough, cells in this zone, right, to be in control of the area? So, again, it's going to be it pulls a lot of data. It is resource heavy. For the higher time frame stuff, the big changes are what you see as if you go on like the daily, for example, it switches from, what do you call it? It switches from, the time period switches from daily to monthly, like 24-hour period to monthly period. So essentially, you're still seeing some people trying to sell off. The higher time frames, people are still trying to buy. We have some major limits below us. That ties into another indicator, right? Actually, I can't see it on the daily, but if I go lower, you can see it, right? If we look at that, then we'll look at the limits, essentially where we want to go just based off liquidations. Lots of potential liquidations. If we break any of these limits around 26.5, 26.7, where do we expect to go? Flush all that down to 25. So a lot of stuff line up with that idea, with how we would potentially handle that. And then higher time frame as well, you can see the major point of control structure. So here on the daily, if I just change this and put, say, I'll get rid of the volume range and the volume candles, and I'll put the delta on and keep the volume profile. Let's see it load up. And then we can start. Why did we fail at the highs here? Why did I tell everyone to short Friday, looking at the failure? Well, essentially what you got at these highs is that you saw a deviation of volume that continued to failure back to the downside, right? So what you essentially then see is like, oh, why aren't we breaking out of some of this volume stuff? Well, there's no major volume changes going to the upside. And these periods, I think even here I'm only on it's only doing a week. I'm on the 4 hour. Let me go to the daily real quick and see if I can show that. So yeah, the big thing here is that compared to the volume we had previously, we had very low volume in this upside area. So essentially what you end up getting was quite a bit of a change where the very low volume area compared to 17.2 million at the higher volume for bulls in this zone compared to 104 million in longs just for Binance futures in this zone. It was more than that, obviously, but it's showing the general volume change. So low volume area versus very high bullish volume area, right? And that's the big change that we want to see. And when you see those reversals, like now we see, bearish volume start to come in, minus 10 million is the number there. So now that we're looking at this, we say, well, there's quite a bit of, confluence in holding this level potentially. We want to see that kind of held as the point of control locally, because what happens if we lose that and we flush all this structure, right? We come back down here into a low volume area, right? What happens then? Well, the worst we can do is grind back down to 23.1, which is the point of control for this whole structure. 23K, 23.1, somewhere around there. So, and it helps you identify that on any chart. It's not just Bitcoin. It's all of the volume being pulled in from that ticker, because we can actually do it now with TradingView, where you can pull in data per ticker. So volume data, cumulative volume data, a limit orders based off of volume, where they're placed and where they should be placed. So there's a little bit of estimation with it, but it's the roundabout the right spot to have it. So it's a lot of good data, a lot of good information. What can't we lose? I mean, shit. Realistically, we can't lose that. We can't lose the point of control at 23.1 because we probably come all the way back down to the yearly open. So I don't think it's going to lose that. If it does, it's wrecked. So a lot of information, I know. Any questions? Sorry, I went on a tangent there because I'm really excited about this thing, because we got a couple of small changes that we want to do to clean up and get it out to everybody, but we're not 100% ready with it yet. Not 100. Yeah, so we're seeing some volume change here, just a little bit. Even though price hasn't gained back above, Watch that 4 hour. If that 4 hour can close back above the daily, back above 28.8, we can start talking about gaining some major stuff back. Any questions? I know it's a lot. I can't hear you, man. You're completely chopped up. Can you try again? Hello? Not working? Hello.
Sounds like you have big problem with the headset or something.
Okay.
Yeah, he's having technical difficulties.
But he can write in the fireside chat, right?
Yeah, see if you can write in there, Slick, what your question is, and I can answer it. I just can't hear what you're saying. Any other questions about this stuff? And again, for like people who join late, thanks, Egil, for grabbing it so you can upload it to people.
Hey, can you hear now?
Hello?
Yeah,
Oh, yeah, we can hear you. Yeah, what's up?
All right.
No, do you have any questions? So, anyways, what we kind of went through overall, talking about like the price action structure, right? Understanding swings, just as a little bit of review, and looking at it from like a lower time frame perspective. So, even with everything off, essentially what you do is you look at the major changes in price movement, and that'll kind of help you find out, like, why is this important price action structure? Why is this important price action structure? And the local stuff, right? Because essentially what you get by looking at these things is a chance to be able to short things and long things based off of how the market's reacting to it, right? So price there, right? So this is like the roundabout kind of summary of what we've been doing is when you have breakdown of structure, you have a new high created and price moves away. You're always looking to short the low of it. Same thing is because that's the best point of failure. Essentially, and this is something I didn't talk about before, is that the probability is if you fail at the low of a swing, because if price is moving up, right, that's the low of the swing, that's the high of the swing, right? So if it fails at the low of the swing, there's a higher probability that it'll move away versus if it comes all the way to the high of it and then fails. Because if it comes all the way to the high of it and fails, that means that's now not potential resistance, if we're going to the upside. And if we invert it, nothing changes. It's the same exact thing. If that's the low in the move, right, you don't want it to fully test the low of it. You want it to test the high of it. You don't want to test the high of the swing. You want to test the low of the swing. So that's why you want price to move away. And there's a little bit of a difference when you're looking at things like perpetual contracts. You're going to see that the wicks to the downside are almost always deeper and harder than the wicks to the upside, and that's for two reasons. It's because most people long and most people it's most people long and most of the liquidity is to the downside. So when you do short or you do have dumps on perpetual contracts and perpetual charts, the wicks down are usually much more steep than to the upside. So that's my whole little thing with that. So overall, even from a high time frame perspective, right? You can do this stuff and it always plays out the exact same way when you're talking about swings and failures, right? From the highest time frames to the lowest time frames, right? Like the bear market low, right? What do we want to see a hold, in that? Because that's the low of the bull market low, right? That was the major swing there. So essentially that's your weekly. That's the level not to lose. And what do you get? You get the bounce, the bearish failure, continuation down. And these are just gain loss of the swing levels that are really important. And the more you look at it, and I recommend people keep trying it, the big rule when you're looking at these different swing structures, isolate the high or the low in the zone. That's really important, right? The high of the zone. This made the low of the zone. It's a little bit janky. But, essentially, the close of that 1 hour is important. This structure, because we actually got a high, and then the previous candle as well, right, gave us a low. So you're looking for a pair of candles around about the high, essentially. So you can do it just from that one candle, the candle that creates it. But you're going to get situations like this current 1 hour where, a big down candle that ended up being a bullish engulfing, which kind of invalidates and makes it hard to understand and use. So I'd recommend doing stuff like moving to lower time frames, because then you start seeing where stuff really plays out. Being able to use the stuff lower time frame effectively becomes levels to short as you break down from, right? That's what it looks like on the 15. That's what it looks like on the 1 hour, and that's all you need to know about it, is that as long as you're below that swing, it's looking for shorts until you test the high of it, in which case it's a little bit less probable to break down and away. So with the swing stuff and the lower time frames, play around with it, see if you can get something to work out. For me, using some of the stuff we have, especially things like the oscillator on lower time frames, when we're seeing reversals, when we're seeing these swing tests, it helps, especially when we see bounces, right? It's very rare you're going to get like the exact move, even on the 3 minute or the 1 minute. It's not going to be perfect. It's not going to be able to lead into it, the structure. But when you get stuff like bullish divergences, and it's gaining back levels, and it's gaining back structure, and it's gaining back the highs of structure, like all of these things are relevant for moving up and down. And essentially what you look for is, if that's the max on if that's the max, what do I want to see then? I want to see something that comes back up and fails the low of the swing. It didn't here. It moved back up. It created a new high. How about on this swing? Did we fail the low of it? It didn't even fail the low of it. It just went back below it and went below that. So you're not going to catch every trade. If you miss a trade, it's not the end of the world. Always wait for the confirmation, because the confirmation is going to keep you sane, essentially, instead of trying to chase stuff that isn't there. And then with the swings, essentially, the higher time frame you go, the better, right? The more information you have, the better. The higher the time frame. Looking at stuff like on the 4 hour, right? Is that still relevant on the 1 hour time frame? Kind of, sort of, not really. How about the 15? Kind of, sort of, not really. So you really look at this for the 4 hour level. Gain back that on the current 4 hour. You want to see the close above where it is now, going back higher to lock in a bullish divergence. That's still a major point. That's still a major level that changes price action. Strength does have a significant effect on crypto. We know this. Bullish and bearish divergence still has a major effect on changes. But just because you get a divergence doesn't mean that's the high. Just because that's the divergence doesn't mean that's the low. You can still go lower. You want the bounce back and the regain. You want the confirmation. So if that bullish divergence gets locked in and it goes lower, what needs to happen? It needs to regain something. What happens if it locks in and then goes higher? It needs to bullshit backtest something. That should be the thought process. If this, then that. Wait for confirmation, and then you can use all of these swing stuff, all these sexy things on the lower time frames, and that works across the board. It works for forex. It works for stocks. It works for everything. There's no change. The only reason I look at crypto because it's easier to trade than all of those things combined. So, any other questions? I know a lot of people jumped in late here, but that's all right. Egil's nice enough to record it for us.
I think Ami have a question, but she can't. She have problem with the sound. It sounds like.
I'm just answering Slicks here because I saw it just now. If cumulative delta with correlated funding rates of 4 hour, wondering if CMD and extremely bullish funding rate can be used as a point of confluence for reversals. The answer is yeah. Essentially, a lot of the things we do with the different indicators together, that's what you would look for is confluence. At the end of the day, everything in the indicators can be pointing one thing, which is why the underlying skill set we all try to develop here is price action trading, gain or loss of level. These things can show all of us going bullish, going up, gaining stuff back to the upside, but it still needs to happen on the chart. Once it starts happening, then we can say with pretty high confidence, okay, we're seeing reversal, we're seeing gain of level, we're seeing very big lows on the 1 hour, big lows on the 4 hour. What do we want to see from this point on? We want to see those gain of levels that give us the bullish divergence. We want to gain back stuff like the daily, gain back the high of this little 4 hour range. And all of these things point together, essentially in one. And the more information we get, that makes everything easier to use and trade. Where's the liquidation levels? Where's all these different things? And all of these points, within about 3 or 5 minutes, you can get a pretty good idea what the important levels are just by using the tools you have, and then seeing, using your eyes, is price going above a level or not? I'd rather have you guys trading profitably, and using the indicators as a confluence tool than only trading the indicators, because at the end of the day, it's an indicator. It's not gospel. Gospel is gain or loss of level. That's price action, and this is what's helping you guys do that. So here on the 4 hour, I really want to see a higher 4 hour gain. Even if it's not the low, then I look for the higher low to kind of go with that bullish divergence. But yeah, I think we can do a session on that probably, because I'll be back normal time on Tuesday, so we can have another like 2 firesides like we usually do. I got stuck.
We need to repeat for the new indicator when it's out, so people can see it and try it and then have questions.
Yeah, that's the big thing we're gonna do next week. Probably we should be able to get it out by Monday or Tuesday. I'll say Thursday for sure. We'll have it out. That's a pretty solid date.
I shouldn't bother Bing with too much stuff this weekend, huh? So he can finish up.
Oh yeah, no, he's got a bunch. I was just talking to him. He's doing a bunch of shit this weekend. We're grinding through all this different stuff, trying to get some alert settings functions on it as well, so we can kind of tie up some of the alerts to make things better. And there's better ways to make the indicators talk to each other. They're already pretty symbiotic and confluent, but the more they can kind of communicate with each other, the better, in my opinion. We're looking potentially to bring back the dot system of think the oscillator, but as dots on the bars. Something we're kind of looking into, but let's see. You can go ahead and end it there, Egil, unless there's any other questions.